following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
Hello, everybody. This is Mark Longo from the Options Insider Radio Network, and I'm breaking into your regularly scheduled programming to let you know about an upcoming event that I think is going to interest quite a few of you. It's called The Future of Options Trading, Finding Edge Outside the Pit, and it's going to be held on November 5th here in Chicago. This is the inaugural conference from the Options Alliance, a new industry trade association that I am privileged to be a part of. And this conference will address the numerous issues facing the fastest growing segment of the options market, namely options entrepreneurs. So who is this event for? Well, if you're a current or former market maker and you're looking for some ways to leverage that unique skill set in some exciting new areas, well, then this event is for you. If you're an aspiring entrepreneur and you're hoping to learn a little bit more about the options market, which is the most dynamic segment of the financial marketplace, but also can be a little bit intimidating, well, then this event is for you. And if you or your firm are looking to expand the reach of your products or services by learning more about the unique needs of options entrepreneurs and new startups and new ventures, then this event is definitely for you. We've got a lot of great speakers lined up covering a wide array of topics, including how to leverage that trading and market making mindset and skill set into other unique opportunities, also overcoming the typical roadblocks and stumbling blocks that may lay in the path of a new option startup or entrepreneur, and of course, perhaps most importantly, how to promote and market that new option startup or new venture that you're planning. Now, I've been to my fair share of options conferences, so I could say with some certainty that there's never been an event quite like this. Take advantage of this unique opportunity to meet with and learn from the entrepreneurs who are out there doing it, building new businesses, starting exciting new ventures in the options market. You can learn more by surfing on over to www.optionsalliance.org and then clicking on the event sign-up tab at the bottom of the page. A lot of people say that their space is limited, but we really do mean it. So if this event interests you, reserve your seat today. Thanks for listening, and now I'll return you to your regularly scheduled program.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly choice for all things options related. A little bit of wit, a little bit of wisdom, a dash of analysis, throw in some unusual activity, blend it all together with some education and some listener mail, and you have the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call the old Options Insider Radio Network. And once again, if you haven't had a chance to check out our latest edition, I recommend you do so, particularly if you like this program, and perhaps you're a wee bit interested in futures options. Check out the old Futures Options Roundtable. It's a great cast of characters doing a lot of the same stuff we do here on the Option Block, but taking it and applying it to the futures options landscape. It is indeed the Futures Options Roundtable. You can find it, theoptionsinsider.com, iTunes, Stitcher, wherever you find your finer podcasts purveyed. We will be up there. And if we're not, like I said, let us know, and we will make sure it is up there. Check it out, the Futures Options Roundtable I think you're going to like it. And speaking of roundtables, we have yet another great one in store for you today. Starting off, let's go in order of the furthest distance dialing in today. We have him beaming in from the great state of Maine. He is none other than the Rock Lobster himself, good old Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program, sir.
I'm thrilled to be here. It feels like an age since we have shared the radio.
Yes, it has been quite a while, but you and Mr. Toussaint did a fine job filling in on your dual show last week. Excellent job, sir.
Yeah, we tried. We had fun, but we just don't have that je ne sais quoi. That what is that? The Longo. I guess we just don't have the Longo voice. That's really. I'm kind of nasally, and Toussaint, he's kind of a hick. So between the two of us, not quite the presence, but we held it together.
People do still write in every now and then using that old Voice of Options moniker. Maybe I'll need to put that on a tag or something. It's funny because like everyone else, I think my voice is like nails on a chalkboard. Other people write in and say they like it. So apparently there's more of the latter than the former. So I have to keep doing this. I have no choice. But they won't let me stop. I keep trying to say, let me stop, but they won't let me. But that's not a bad problem to have. Speaking of not bad problems to have, we are joined by the return of the wide globe-trotting Viceroy, back from his extended sojourns to parts unknown. Mr. Alex Jacobson, welcome back to the program, sir.
Hey, Mark, it's good to be back. And as I mentioned to you pre-show, I was out in Seattle and met a listener, which was quite interesting, sitting at a wedding rehearsal dinner. And so it was kind of cool to be recognized. And I finally got to play with the Tesla Model S, and it is amazing. Just amazing. But also should point out, I know we talk about this now, we're taping on Thursday after the close, and Microsoft just announced blowout earnings, kind of surprising the street. So an interesting day today.
Yes, we have a lot in store for us to discuss today, but of course it is always fun to meet the listeners as well, particularly when they are scattered as far and wide as Seattle and Portland and other areas. It's fun, you do the show and it has a great reach and whatever, but when you actually meet the people in person, it definitely has much more resonance to it. You get to see the listeners, hear what they think, get their input on the show, get their feedback. I find that's a great experience. It must have been fun for you going that far, and meeting some listeners is always a great experience. All right, and we hope to be joined a little bit later by good old Uncle Mike Toussaint if we can get all the Skype guys to smile upon him. But for now, we're going to keep on rolling right on into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the program where we break down some of the activity that's been lighting up the old street today. And it was another mild one. We've been talking on this program and some others on this network recently about what's in store for the near term of the market. A lot of people seem to be not that concerned about riding some gamma now, which is interesting, given that vol isn't exactly what it once was even a week ago. But people seem to be complacent in the near term. Longer term, they're buying up some vol, buying up some gamma, thinking we're going farther down the road, but right now probably not too much. And it seems like today was a little bit of a rally, but nothing too aggressive, a little bit more aggressive in the NASDAQ. But as Alex alluded to, the real story today is in the earnings. We are in the height of earnings season, and today, call it Super Thursday, call it whatever you want. Today is the day when a lot of big names were putting it all out on the line. Maybe we'll start off with the pre-earnings ones, and then we'll get to the after hours. You saw a big name, Ford, coming out in the wee hours here of the morning and reporting some, I guess, in line estimates, but it's still the market still liking what they had to say, up about 1.5%, rallying to about 17 3/4. Alex, this will bug you to no end, but my collar expired worthless, so now I'm back in for it again, and I'll have to decide whether to collar again, perhaps just to tweak you a little bit. I might put that collar on again instead of selling the stock.
I'm just glad the trade worked out for you, Mark.
I can never sell this stock now because I know how much it means to Alex, so I have to keep doing that collar. That's the only way I could possibly get out, because if I sell the stock, then I concede defeat on that collar.
I'm just glad the trade is working for you.
It's funny, actually, because it's a retirement account. I kind of want to get out and move it into other things, and Ford does not seem to want to comply with me. But there are worse problems to have, a stock that keeps going up despite my better efforts. So, yeah, Ford rallying yet again and looking fairly strong here. People loving all the different Ford products and the Ford Touch stuff. So, apparently, Ford, nice rally over the past year from 9 to about 17, so nearly doubling. So, some good stuff if you've been a Ford underlying holder for quite a while. And actually, from an options perspective, it's kind of lit up over the past few months as well, become a lot more attractive than it has been earlier in the year. But now let's jump ahead to the after-hour stuff, because that's where a lot of the action is cooking today. And we're seeing in the after-hours, Mr. Viceroy already tipped us to this one, so we'll just start off here. Good old Microsoft. I know you were in the Microsoft neck of the woods this past weekend, Alex, so you probably are up to the eyeballs with Microsoft info. But yeah, they closed today $33.73, had about essentially unched. Everyone was waiting for the after hours, and sure enough, the after hours just lighting it on fire, up about, it's up about 2 handles now in the after hours already, trading about 35 3/4. So just aggressive stuff here from Microsoft. Looking here, they closed about 34. That straddle went out about $1.20, $1.25 or so. So already well outpacing that ATM straddle for the weekly there, which is a good base barometer for looking at how these earnings are performing. And if this holds up, if it maintains this amount of movement into the open tomorrow, then if you're a premium buyer, it looks like you're doing pretty well. Mr. Giovinazzi, I know you guys have been taking another look at Microsoft lately with all the clients and mentees over there at Option Pit. Doing any structuring going into the earnings? I know we have some unusual activity to talk about. We'll get to that in a minute. But what were you guys looking at today going into the earnings?
We closed a straddle up like $4 today. We didn't keep it into earnings. Third time in a row where we made – this actually didn't make much on the straddle prior to earnings. The other two we did made good money. But this is the third time they've blown out the straddle, and, of course, it would have turned a nice trade into a home run trade.
It's always the way, isn't it? The day you close it out.
The one time I keep it, it's going to be up 20 cents. So, but for the most part, yeah, and Microsoft is one of my core holdings for myself. So I'm thrilled. I'll be selling calls tomorrow.
Now think about what you just said, though, and how outlandish that would have sounded even a quarter or two ago, where you said you have to hold Microsoft through earnings. Microsoft has been the most reliable earnings sale of any name for pretty much the past decade, and now this year it has suddenly caught another leg.
In 2013, though, you would have lost
exactly.
Judy.
Exactly. That coin has completely flipped. Microsoft now suddenly coming to life. It's got some vol, got some movement, outpacing its earnings straddle. I mean, aside from the last few announcements, I can't remember the last time that really happened in Microsoft. So, and you're right, that strategy you've outlined, we talked about it on the show before, taking advantage of some of that pre-earnings vol going into the balloon so you get those free days of decay that you can trade and try to do stuff, as you like to say. And for Microsoft, that's always been a great strategy, and now it seems like that last kick is coming after the announcement.
Right, and this time, I mean, literally the strategy it made small dollars. You could have traded it a little better, but obviously the after, with what we had left, it was all unbalanced, mostly just long calls with a couple puts because we had that little slide down. So we're doing all right.
We're doing all right. There you go. Can't ask for more. At least you're not bleeding, right? If you're not bleeding, you live to fight another day.
We're not bleeding.
Mr. Alex, I know you just came from Microsoft country. I think you have some family in the Microsoft fold even, so you have a lot of stake in the old Microsoft game. What's your take on this kind of newly revitalized Microsoft we're seeing here, at least from a stock perspective?
I think this company is finally going to turn itself around, bring in some new management and turn itself around. I mean, it still has a wonderful installed base. It's still the company everybody loves to hate, and those are the makings for good stock performance. My crew out there has roots in Microsoft, Amazon, and married into Starbucks. So it's a true Seattle family. And again, Amazon just posted earnings, which of course no one will understand. Looks like they lost money again, and they're up $20. So I have no sense of that stock. But, it's it's an interesting day out in that marketplace.
Are you seeing, I mean, of course, obviously, with the inflated stock price, with the vol coming back, I'm sure you're seeing more interest over there at OX. You're starting to see Microsoft lighten up the Idea Hub and stuff like that, too?
Microsoft isn't in the mix in the Idea Hub because there isn't a SIBO.
Oh, you need the single name VIX, essentially, right, to do it.
Although we're in the rewrite now, and we're looking at including some of the more liquid names. The fourth iteration of Idea Hub is going to have a diagonal in it, and it's going to have only the most liquid names, so we're not going to look at any vol metrics. So Microsoft will go in one of these iterations, but in terms of the tape, I did talk to the desk just for a few minutes earlier, and they were like, okay, you're not here today. It's Facebook, Tesla, Apple. And I asked any Amazon or Microsoft, and there was this pause, and one of the guys on the desk said, oh, yeah, we did a lot of both of those today. So clearly people were playing the earnings.
All right, speaking of Amazon, this is another one reporting today. After the bell, another one that is notorious, like you said, Alex, for making no money, making some cool announcements, some cool hardware, some cool customer-friendly initiatives, and giving back all of its profits in some form or another in those various initiatives, and yet continuing to rally at maybe on the strength of just goodwill. This is the name, though, as long as Amazon's been around, I've heard the naysayers on this one. I clearly remember, and maybe Andrew, you do too. You probably overlapped with me a little bit on the floor of the SIBO. I know you were out in the hinterlands on the Pecos and elsewhere for a while too. But down in the late '90s on the SIBO, when Amazon was kind of first coming up, and it was the heyday of the .com boom, it was just everyone you talked to on the floor was completely bearish on Amazon. There was the death count on them. They were supposedly burning through all their VC capital. They had 3 months to go until their cash burn rate consumed them, and this was probably, I don't know, late 1997 maybe, and here we are over a decade later and they're still around. So I'm used to hearing these naysayers, and yet Amazon rallying in spite of them. Today they closed at 332, roughly even today, up about 5.5 handles today, so up about 1.7%. So a decent rally for Amazon even going into the announcement. And that straddle, let's see, they closed kind of mid-strike. So let's look at here at the 335 straddle. It's got a couple points, obviously, in the money on it, but even with that, it's trading for about $23. So knock off the $2 in the money, about $21 worth of juice on that name. And we're seeing Amazon trading up about 16 handles to 348, 349 right now. Oh, it just crossed 350, so up about 18 handles. So still a good 10 handles or so to go. Actually, no, I'm sorry. Let me take that back. It was only 22. So still a few points to go here, but it looks like it's faring well. Mr. G, as the kids like to call you. Any interest over there in Amazon and option pit these days, either from the mentees?
I think we had one client that is a long-term holder because he's the same opinion. He's like, I don't get it, but they still like it. And I think he sold a call. I think he sold a 330 call for $20, 2 months out, or $30 or something like that. So he just keeps selling a call that's about 10% of the value of the stock every earnings, and it seems to work out.
Well, he's out right now, but he's happy because he's at about 350, right where that call is pretty much.
Yeah, but it's been a long ride up. So
yeah, he's
happy in a good way.
Can't complain about those. That goes back to what we said on the show many times about getting your stock called away. If you're writing the calls, there are worse things. Now, is he one of those guys who will allow his stock to be called away, or will he roll?
I don't know if he's going to roll. I mean, obviously, what you do, well, really, let's see what happens, because he doesn't sell the weekly. He sells more like 4 to 5 weeks out after the earnings to get a little more juice. So he'll let the juice come in. He's not going to be in a rush to roll that right now. He'll wait.
Sounds like a Giovinazzi mentee in action.
It possibly is.
Let the juice come in. Yet another subtitle for this forthcoming book that has been forthcoming, about as long as I've known you now, over a year.
2 years. It's 2 years forthcoming.
So it's taken some time, getting all that.
It's funny. I've got all the chapters, and we'll sell one copy, probably to my mother.
I will certainly buy one, if for no other reason than to see my back of the book blurb, because I'll have to be on there. I'll have to be on there because I've been talking about this book for 2 years.
Too. I want to be the first person to write a book where the Viceroy says something nice about it.
There you go. There you go. As opposed to his usual dark proverbs and dispensing of very, very cynical wisdom to the masses.
By the way, Zynga first earnings, it's actually been up on earnings, I think, in six reports.
There you go. I was getting to them, but you couldn't wait. Couldn't wait to bring in the big Z.
People that bagged on me for a buy ride, it's been one of the better trades for us in 2013. So I'm just laughing. I mean, you buy the company for intrinsic value. How much can you lose? It just took a while to get there.
Unless it's like Enron style intrinsic value, and then you have a whole other conversation on your hands.
Exactly, but they do have a very fat, nice building in San Francisco, and the value of property there, I think there was no top for that. So,
well, there you go. Because apparently there's no top to the stock again today too. Zynga closing at $3.54, reporting in the after hours, trading up to $4.12. When was the last time they broke the 4 handle, Zynga?
Huge, a while ago. I don't think they've seen it this year.
I'm looking here. There was a spike to $3.95 back about right in the beginning of October, and that was kind of about it. And ever since then, it's been well south of that. Usually south of the 3 handle for most of the year.
It did see 4. It did see 4 when we were getting a little happy on the gambling, and now it looks like they are refocused. I wonder if I haven't seen the earnings yet. Obviously, they're not losing as much as they thought, or maybe they've actually managed to start eking out a little profit. But when SoftBank bought that other gaming company, or bought a stake in that gaming company, what's it called? My kid plays it. It's Clash of the Titans. And it gets his 1 hour a week on my phone. Is
it not Rovio, the guys who make Angry Birds?
No, it's another one. It's called Super something. It's like a Norwegian or it's some sort of Scandinavian company. And SoftBank bought a huge stake. But you got to buy more credits to get to the next level. And my kid's killing me like, Dad, can I spend $1 to get the golden, earrings or whatever? I'm like, no.
Gotta love those games.
So he's stuck at this level and he can't get past. I'm actually kind of a bad dad, so I'm gonna give him. I'll be a sport and spend $1 on whatever the next level of stuff is.
Keep the kid from playing the same level for the next 2 months for $1. Cough it up, Dad. He's worth it.
So speaking of, and now they just set the Twitter IPO. They're going to value the company at $11 billion.
Because that makes sense. I know you're a fundamentalist, so that must really just rub you the wrong way.
Well, Twitter hasn't made I'm expecting them to make money. I think it feels like it's going to be 2 or 3 years before they can generate like $100 million a year in actually profits. Facebook, when they went IPO, they were making money. I didn't buy the Facebook IPO either, but this, they're definitely trying to hit the high end of the range here with this valuation, I think.
Yeah, how they're going to make money is they're going to dump a bunch of stock to everybody here, and then they're going to take that and run, and then the thing's going to retrace all the way down, and then they're going to buy back a bunch of it really cheap, and then pull the old Facebook dance. Yeah, this is kind of the old kind of West Coast Silicon Valley thing. If you don't make money, then you make value per user. That's how they do it. Oh, we have so many users, so that has to translate into X dollars worth of value, because clearly these users are worth something. We don't know what it is yet because we haven't tapped into it, but someday they'll be worth something. So we have so many users. We haven't made $1 in revenue, but we have so many users, so that'll work out somewhere in the end.
Every user's worth $40.
Exactly.
What they're saying. Something like that.
$40. Good God.
Doesn't sound like a lot, does it?
$40 sounds like a lot for Twitter. For a Twitter user, it's $40.
$40 per user.
They're gonna make $40 worth of any sort of revenue off every person who uses Twitter. That sounds like a lot. If you had said maybe $2 to $4, then yeah, you could probably do that with some CPM.
That's the future value, right? So what they're saying is the future value of a Twitter user is $40 right now.
That's many years into the future, 100 years perhaps. Depends on your timeline.
I think from a cash flow wise, they're valuing it right up to the limit. The problem is they're only gonna sell $1 billion for the stock. That's the key. They're having some restraint. Yeah, they're not selling a big chunk of the company, and that's what's going to make it go gaga. We need to check the footnotes on those prospectuses to see what the timeline. I'm thinking it's a 100-year timeline for that forward value. I'm just guessing. That could be.
Before we move away from Zynga really quick, I know you were looking at some strangles out here of late. Was that still your play going into earnings?
We got out of our strangles. Actually, I mean, it would have been a gigantic home run had we held it, but it was already a home run because the ball went up so high. So we did close those. What I did though is I moved into just like a diagonal time spread, just owning the like 2 calls and then selling the 4 calls against it. So obviously today that trade's looking okay.
So that's like the old swap the covered call for the deep in the money instead. Right.
So I got rid of so that was the next play, and then obviously we'll see what happens here. But I'm happy with and the calls we sold. Where the idea was the November calls expiring next week, and we'll just roll those. We sold them for 19 cents, or 20 cents. So we'll just, obviously I don't have to do anything. Just wait and see what happens, and then we'll roll them when we need to. So
yeah, I love that strategy.
I think now if the stock really, I got to look at the earnings report, but if they're starting to make just a little bit of money, I think it's off to the races for it. So, but they needed to turn it around. That was whatever you had to wait for.
Yeah, apparently they did. I haven't looked at the numbers yet, but apparently someone likes it somewhere.
I know. Right after the show, I got to go back and work more.
Let me just clarify for the listeners too, in case they're confused. I was talking about swapping the deep in the money call for the underlying portion of the covered call, and that's kind of what Andrew's doing. A strategy I've espoused many times on this program. One of my favorites, kind of tweaking the covered call and making it into a bit of a diagonal time spread instead, and getting all that extra juice that Mr. Giovinazzi is so fond of, shall we say.
And also, you pull a lot of your capital out of the stock.
Exactly. That's the biggest bang for the buck.
Just sit on the sidelines and you have the same delta as you had before. So when the market goes ugly, it's like, okay, well, I don't need to have all my money owning stocks all the time. I can still have the same exposure, delta exposure, but I only have, a fraction of you only got a fraction of the risk. And that's, welcome to, that's how a hedge fund makes money. They borrow other people's money, though, to do it, but you're actually just taking the money you've made and you're pulling that cash off the table and setting it aside.
Yes. Very popular one. Much more efficient from a capital perspective. Of course, you have that delta to protect you a little bit on the downside as well. Stock drops. Zynga's only $2, so you can't really go much farther here. But on a higher name, your stock keeps dropping. The delta's going to decrease. That'll protect you a little bit. And also, the vol will increase. All of that helping to slow the rate at which you lose money. Which is always a good thing as well. Before we move away from these, Mr. Alex, anything on Zynga or on the forthcoming Twitter or just the madness that is Web 2.0 / social in general these days?
No, but, we all discounted Facebook and we all kind of kicked it when it was down, and now it's sitting up here in the 50s. So there's clearly enterprise value in a lot of this stuff, and an interesting time to watch this.
Shows what we know here. We didn't really kick it so much as Wright puts on it. I'm not sure if that's the same thing. But if they are, then we all happily did so and did all right on it. Too bad Mr. Tusaw isn't here. We could talk about some of the vacillations we've seen in Apple post iPad, whatever it is, 5/Air, whatever the heck they announced this week, and then rolling into the earnings next week. Odd time to be making a big announcement like that.
Well, what's the thing about Apple, which I find interesting, and this is like, almost every time, Alex, and correct me if I'm wrong, because usually your memory's better to this stuff than I am, and we need Tusaw, really. But almost every time they've done a product announcement, what's happened to Apple stock right after the announcement? We all know what happens to the vol, but what's happened to the stock almost every time?
Takes a big, huge hit.
Dump, right? And this is one of the first times they really like this new iPad stuff, right? Because that was really the big thing. I mean, the market likes it. Stock's up like $12, $14, something like that. I think we were looking at $5.15 a couple days ago. It's $5.30 now. Even after Icon, whatever, and maybe it's the Icon, going to like punch Tim Cook in the nose and, take over the board or whatever. But Apple is showing surprising strength after a product release, which we haven't seen in
Yeah,
2 years?
just go back a month or so. They cut the legs off from under it after the iPhone 5S, and now this new iPad that apparently is thinner and lighter, which is probably the opposite of what I've been looking for in a tablet. I got a little guy running around the house. The last thing I need is a thinner and lighter tablet that he could snap in two over his knee. But c'est la vie, maybe my use case is unique, and everyone else wants this apparently, because I'm the odd man out here as the stock continues to rally. I almost called you Uncle Mike. Alex, has Apple been lighting up the old tape over there, particularly maybe once again from an Idea Hub perspective? You've seen a lot of customers starting to flock to it and really resonate around Apple again these days?
Yeah, and Apple in the electronic brokerage community and the discount community in the first half of the year was paying a lot of bills, and market-making firms you talk to would say, we're breaking even everywhere but Apple. We're making money in Apple, and Apple is back. And it's kind of a funny perspective coming from Seattle, but downtown Seattle now looks like Silicon Valley, except it isn't the research centers, it's the application centers. Amazon out there is growing. The Apple store, it's funny because there's an Apple store right across the street from a Microsoft store. And you kind of walk in the Apple store, and there are people there, and it's hopping, and it's exciting. And you look at the Microsoft store, and it's kind of like the early days of transistor radios. It's kind of the clone. The store looks the same. Colors look a little different, and there's nobody in it. But there's a real tech sensitivity out there. Amazon now in Seattle is going into the grocery business in a big way. But yeah, Apple is definitely lighting up the tape again and paying a lot of bills, and we're seeing a lot of two-sided paper, and makes for interesting trading.
Yeah, I'll have to wait for Uncle Mike to come back on the show on Monday to get the full Apple report. But you're right, Alex. Over the last couple of years, it seems like the narrative for a lot of the market makers that I was talking to was they were migrating into corn. That seemed to be the place where the vol was still alive. There was still liquidity throughout many of the months, and they could actually trade back and forth. And that narrative seems to have shifted over the past year. A lot of those guys, you talk to them now, they're pretty much Apple dispersion guys. So they're following the trend, and Apple seems to be one of the few places left in the equity realm where you could actually trade and get some vol, get some liquidity, get some action across a variety of strikes. And so they've all migrated out into Apple, it seems like, these days. Speaking of migrating, we have to keep running. We've been gassing on quite a bit here in the trading block, but a lot to talk to as it is the height of earnings season. And now we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, listeners, that funky tune means it is time once again for the Odd Block, the portion of the program where we break down some of the more, shall we say, bizarre activity we're seeing lighten up the old tape here in the options realm today. Going to kick things off with, I think I talked about this one before, but it's been quite a while. This is Covanta Holding Corp, ticker symbol CVA, closing today $17.72, down about $2.50 or about 12.5% on the day. So taking a bit of a hit here on the old CVA front. Surprisingly, though, the paper, usually on a day like this, we see people flocking in to buy in puts, and we did see some of that, but we're going to start off with what we highlighted here on the old site today. And again, if you want to play along, play the home game, surf on over to theoptionsinsider.com. Click on the Unusual Activity tab. You can read the full alert for CVA and everything else we don't have time to get to on the show today. And we started off, it seems almost quaint now because it was so early in the session and so much other paper lit up the tape after this, where we started off highlighting a buy of 400 of the Nove 20 calls for about 10 cents. Now, this is the name that does about 600 contracts a day. So on a normal day, that would have been a ton of paper. But today they did 26,000, nearly 27,000 contracts. Again, a lot of it because of that massive crushing the stock took today. So what do we see? Well, after we wrote up that 400 lot, we saw people keep piling into that Nove 20 strike. total of 1,600 times on open interest of just 300 contracts. So this is all open in paper. Gobbling up for prices probably around 10 cents still. They went out a nickel at a dime. I'm sorry, nickel at 15 cents. So that dime right in the middle there, lighting up the mid-market of the tape there. Rolling on out to Dees, we saw 1,000 of the Dees 20s going up as well today. Again, on about 1,000 open interest. So that could have been closing. But then the biggest trade actually rolls on out even farther to March, where we saw 7,000 of the March 15 puts going up. I don't have a price yet. We'll have to pull those later. On open interest of 0. So clearly that is some open in paper, as well as about 2,000 of the March 17 half puts on 81 contracts open interest. So again, opening. Maybe that's a 1 by roughly 2 or so there. It could be. And then we saw, flipping the script to the call side, the March 17 halves going up nearly 5,000 times on 5 contracts open interest, and the March 22 halves going up about 6,000 times on 22,000 contracts open interest. So it could be a big vertical there as well. So crazy paper lighting up the tape, Andrew, after we profiled that initial 400 contracts. So that's a lot to take in. What's your take on some of this late hours paper lighting up the tape here in CVA?
You know, I think it just felt like buy. I don't want to sound like a famous TV personality, but you're buying the no 20 calls when the stock is $18. It's like a 2 volatility stock. I mean, clearly, that is some pretty crazy opening paper.
That's aggressive, yeah. That's pretty aggressive.
That's what I thought. And then they bought the 17 and a half, so like $1.25, $1.30 today. They're buying the March 22 and a halves for 15-20 cents. I mean, it's like, whoa. So either they think the company's going to get bought out. Now this and it was down $2.50. I think, and their earnings were okay. It sounds like they just gave really poor guidance for the next year. And either everybody's getting in buying the stock, but I didn't see a lot of call writing. That's the thing. Volatility literally went up 50%. So just buying everything. So obviously paper thinks we're going to bounce. That's the closest thing. We looked at in the pit report. I thought one of the better trades was you could sell the D17 and a half puts for 65 cents, which basically gets you, the 2-year low on the stock. And it pays a dividend. It didn't look like a bad trade to me, but I couldn't get any. But nobody really had an interest in it because the name was kind of new. But
yeah, I think this is bullish stuff too. Now, the more that I look at it now, particularly this paper out here in March, this looks like it's a pretty deep spread. The 17 half, 22 half call spread going up about 5,000 times, and he's writing these 15 puts to finance it all. That's what I would have. If I had to guess what went up there, that's probably what it was.
I think so. Yeah, I agree. So
size bullish paper here in CVA. This is another one we got to mark in the to be watched. This goes in the file to be returned. We have some time on this one. We have until March. But this is an interesting one with people just lighting up the tape, and a name that does 600 contracts a day. So this is some size paper. People obviously not thinking that, at least if all this paper is, we're looking at it the right way, then that this is not the perhaps dire straits that everyone's thinking for CVA, and that actually this sell-off could be a bit overdone.
Yep. Let's do the Microsoft one next.
Yes, we'll definitely do the Microsoft. I can see you champing at the old bit, so we shall do that. We shall close the book on CVA, at least until March. We can roll back and see what was going on with all those puts and calls and whatnot, and keep on rolling into a name you haven't probably heard on the show in quite a long time because we haven't really talked about it in ages. This is, of course, Microsoft. And, of course, we were talking about at the top of the show, and a lot of paper trading in Microsoft today. No surprise, given that it is indeed softy earnings day. The stock is doing about 200,000 contracts a day, doing nearly 500,000 today. So a lot of paper across the board. Every strike, every month, people lighting up the tape in Microsoft. The trade we decided to highlight here was an interesting one. It's a Nove 3036 Strangle going up for 31 cents. Paper bought it about 5,700 times or so. So that's a pretty interesting one. 3036. Looking where we're trading right now, this is probably right off the bell, this trade went up. So this is probably a play going into earnings, I would have to guess. I'm just hoping they held it. Like, given what we talked about lately, hoping they didn't pull the old, of course, if you put it on in the morning, you close it by the afternoon. That'd be kind of silly. But anyway, I've seen sillier things in the odd block, and the stock trading right now nearly 36, so this strangle could be in the money in the foreseeable future. Mr. Andrew, what's your take on this softy strangle?
Sorry as I interrupt you there. Yeah, I think I think Microsoft actually will probably drift to like the highs of the year after this earnings report. So my guess is they hold it, maybe sell it for 55, 60 cents, something like that, make a double on it and say thank you very much. So I think they're going to do okay.
I think this is
They'll
Balmer.
probably be breaking even tomorrow, but if the stock lifts, they'll do all right.
This is Balmer strangling the stock before he goes.
Exactly.
I think it's going somewhere when I leave. I don't know which way, so I'm taking both of them.
I'm going to take it with me.
But all this upside interest, and this obviously not upside, this is just interest in Microsoft going somewhere. This is more vol than anything. But interesting to see this narrative with Microsoft. A lot of tumult over there. People keep saying that their legacy products are kind of dwindling. Office and Windows not going to be the stalwarts they've been in the past. They're kind of flailing in other industries like tablets, and they do all right in gaming, but the phones, they kind of swung and missed out there. So They haven't really found their way. They're getting rid of the CEO, and yet the stock continuing to rally, apparently. So interesting.
It's just cheap. They throw off lots of money. I mean, like one of the smartest fund guy manager guys I know was buying it when it was, in the low 20s or high teens. And he always thought of it as a CD. I thought that was a really smart idea. He's like, where's it going to go? But it pays 3% a year. So it's better than a CD. And he was right.
Imagine if he wrote some calls over those 10 years. He would have gotten a hell of a lot more than 3%.
Yeah, he did okay.
So
Let's just say he didn't lose.
The Balmer strangle. We'll have to keep an eye on this one as well. Of course, I think I kind of probably fall in your camp as well, Andrew. Probably drifting to the north here, and this strangle probably will work out all right. Probably doubling their money or so, there are worse things. And then closing the books on that trade. And now we're going to close the books on Microsoft, at least for now, and roll on into an odd block special. I know you throw this one in here just on show days, Andrew, because we love these little ones. We're going to go to SVM, a name I know I can't start my day without checking. This is Silvercorp Metal Inc. Closing today, $3.47, up about 17 cents or about 5.5%. And what we saw in this name that does a whopping 700 contracts a day was 22,000 contracts going up today. And a lot of that, let's see how much of that. 12,000 of those 22,000 contracts came in one massive gobbling up of some in-the-money calls, the Jan 3s to be precise, going up, let's see, for prices about 75 and 80 cents, so paying a bit of a premium, but it's a longer-term call, and going up, when we profiled it, about 6,000 times, and that doubled over the course of the session to about 13,000 contracts, so a lot of paper going up. Looks like someone took the opportunity to spread off some of them, sell 2,000 of the 4s to lighten the load a little bit. But some aggressive getting along some deltas here, wouldn't you say, Mr. Andrew?
Yeah, it's the same thing. I mean, one thing Alex knows, he's been around long enough. Options love a bull market, right? We're in a bull market. Fed's pumping liquidity in. You got a stock like Silvercorp Metals. I think that is based in China, and they mine silver in China and Canada. The miners have been knocked in the dirt for a while. This is a play on those. And the volatility up huge. They're buying no 4 calls in here ahead of earnings. No 4 calls for a dime. I mean, that's like Zynga territory. You know what I mean? Crazy. But, this is a miner.
I was being charitable, assuming someone wrote those, but those were buys as well, huh?
I know. They were buying a bunch of them. So, open interest was 200, 1,000 trade. You're going to sell those for a nickel? I mean, that's kind of dumb. So, I mean, people are speculating. That's all I'm saying. I'm seeing speculation, especially if you look at some of our unusual activity. We've been seeing more and more of just this kind of bullish call buying in these miners. I guess people are scooping the low or something like that because they're a little freaked out about gold prices now that gold is starting to come back again. But definitely some people are spending some money on some calls for sure.
Speaking of spending some money on the calls, we're going to wrap up here with another little name, Jive. This is Jive Software Inc., ticker symbol JIVE, closing today up about $1. to $12.90. So that's about 8%. That's an aggressive move for them. And looks like this guy here is already on the right side of the fence, because we saw someone gobbling up a lot of the Nove 12 halves today. We wrote it up when about 5,000 had hit the tape. In total, at the end of the day, nearly 14,000 of these Nove 12 half calls went up. Most of them buys. Prices started off around 60 cents. I'm sure the latter fills were a lot higher. They closed $1.10 at $1.15. This is the strike that has less than 1,000 contracts open interest. So this is all open in paper. Earnings are about a week away or so this could be a size earnings play. Of course, this name already moving, so perhaps this guy was hip to something before it started going here in the underlying. Either way, looks like in a pretty aggressive bullish play, unless you saw some stock going up with this, Andrew. Looks like
I didn't.
Yeah, so it looks like someone's piling in ahead of earnings.
It sure is, and they were right.
Yeah, they can get out now. They're done.
I think so, and this is you know what? Look at this. Their software provides a social business software platform, whatever the heck that means. Right?
So you can do your business Twitter.
It is something, the company, it has revenue. It doesn't really make a profit yet. But it's a social business platformy thingy. And if it's a social media thingy, it looks like they're taking it up. So we need to just search everything that has the word social in it and go buy it, because I think...
Exactly. Or mining.
And I think you're going to make some money over the next couple of weeks, until at least Twitter IPOs.
then they'll kill that one like the way Facebook did after it came out.
Wow, that just killed everything, didn't it? Everything died after that.
All right, thank you for that, Mr. Andrew. And now it's time to keep on rolling right on into the Viceroy Block, a.k.a. the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, this is, of course, the portion of the show where the Viceroy takes the reins. And, Alex, I know you've been traveling a lot lately, so you don't have a lot to highlight. I just want to know if you had a chance to listen to our show from Tuesday of this week, because you missed a heck of a trading patterns guessing game. Let me just say that I stumped Mr. Sebastian left and right. He even tried to pull the old trick, when in doubt, guess Apple or Facebook, and even that didn't work. So the OX clientele are a crafty lot.
Yeah, yes, they are. I haven't caught up on my listing yet, but I will over the weekend. But a couple interesting patterns today, and this was true with us and the industry today, is that index business was soft today, which kind of makes sense. It was all equities all day today, and it was the usual suspects, including Facebook in expectation of earnings, Nokia in expectation of earnings. But man, it was Apple, Amazon, Tesla, and those are becoming perennial favorites. And as we mentioned earlier, Apple is back. Apple hadn't died, but it had gone soft for a bit. Apple is still, at least at our shop, the only thing that's giving the minis any viability. For a while, a little bit of gold in the minis, but we're still promoting the mini product, and Schwab Options Express are a big mini book. But it's starting to sound like a broken record. It was the usual names today, and as say, index business was down. Of course, index vol was down, and a lot of the index business in our space are premium sellers, and it looks like a lot of that stuff is in place. So we'll look for some unwinds as we go into tomorrow on the weeklies. But it was an eventful day, and it was an earnings day.
I think the street got word of your test drive of the Tesla Model S, Alex, and that gave Tesla the lift up 5.5% today. just on the strength of that alone.
Yeah, and the funny thing is the states are talking about cutting the tax credit, the hybrid and electric tax credit. I didn't test drive. They let my son test drive. I got to play with it a little bit, but when my son took it out for a test drive, the car didn't come back. He just loved it. We're actually on Mercer Island, which is hilly and in some ways ideal for an electric car. Our rental car was a Ford Edge, and I could not keep up on the hills. And the amazing thing about the Tesla on the hills is it just goes. I mean, it's just instant power and it goes. So my son used my test drive time for his test drive, came back and said, we got to get one of those. We just absolutely have to get one of those. So I mean, I see it. And the thing about it, especially in some markets, I know they're finally opening a shop here in the North Shore. They're opening in Highland Park. They've got a store in Old Orchard. But the thing about, the Seattle market, maybe I'm overplaying the Seattle market, is technology and trendy is all about that environment. I mean, you notice more Teslas there than I've noticed at any time in any other city I've been through. So, but today was equities. Today was earnings, and it was an equities day, and market's up another 100 points, and it looks like we're going to continue to trend upward and maybe see volatility continue to dribble out. Washington's behind us for a while. So it was, an interesting day overall.
Yeah, Tesla, like I said, this one, it actually sold off a little bit over the last week, so it had the temerity to actually drop a little bit. And interesting to watch this, a business model that is essentially built on government subsidies. If that goes away, let's see if the bears can actually sink their teeth into Tesla. They've been trying to for some time without success. If that could finally be maybe the straw that ignites their fire and gets some traction to the downside in Tesla, we'll see. Otherwise, that's been probably the easiest play in the market over the past year. You just bought calls and put them away, and you were looking like a genius in Tesla. All right, thank you, Alex. And again, we have to get that guessing game going. I think that's pretty fun. It might be a fun little segment to work into the rotation going forward. So stay tuned for that, listeners. And now it's time for our final segment, Around the Block.
Around the Block.
All right, and I'll have to check to see if those car horns are from Teslas or if they're from more traditional cars. I'm guessing the latter, but maybe we can adjust the audio to have some Tesla horns in there because we talk about Tesla so much. But going forward, it's not Tesla, it's a bunch of other names on the old earnings roundtable as the earnings explosion continues. We were talking about that Little Fruit Company. They are, of course, next week on the 28th, which is a Monday. So all the Apple traders are going to be paying good attention over the weekend to what's coming out from Apple on Monday. They had the announcement this week with the iPads. Now next week they have the earnings announcement. It's been a busy week from an Apple trading perspective. So a lot of stuff to watch out there. Of course, we talked about gaming earlier with Zynga, a more legit player in the gaming space. EA coming out on the 29th. I know, Andrew, you like the gaming stuff. So also Take-Two, a rival in the publishing space for them, coming out on the 29th as well. So if you're a Zynga trader, you want to step up maybe to the next level, Take-Two and EA both coming out on the 29th. Alex mentioned Nokia. They're also on the 29th. Marriott. We don't talk about the hoteliers here very often, probably because they're a little bit more staid from a vol perspective. But Marriott's had some movement of late. They're on the 30th. And, of course, that other big retail-centric name, Facebook, on the 30th as well, and you throw in some LinkedIn on the 29th, some GM on the 30th. There's a lot to pick from if you're an options trader right now, a lot to really watch. Any of those names really resonate with you, Andrew, or maybe something we forgot to mention that you're really watching coming up this week?
You know what? My biggest curiosity is the rise of the euro. I'm not, it's just making all-time high. It's why? Because U.S. is dysfunctional, because Yellen is going to keep QE going for the next 25 years. My kids are not going to have to worry. I don't know. It's a little funky for me. So that I'm watching. Those names in particular, I mean, we'll just see how there's an earnings play and, about them in general. Apple, who knows, right? It could be anywhere. And I don't know how, obviously those that new iPad stuff won't be in this quarter's sales. So I actually think the earnings will be just so for Apple, because I don't think they're getting the iPhone that I guess is selling, I don't think it's selling as well as, enough to really drive those earnings higher, but who the heck knows, to be honest.
Well, they don't need earnings now because they got Icon talking up the stock, so that's all you need.
The thing is they're still generating huge dollars, and it just makes the multiple cheaper and cheaper. So
I think he came out with some news today. He said if you buy back $150 billion worth of the stock will be trading $1,026 in 3 years. Talk about fantastic math. But yeah, he's like essentially saying, give me a chunk of your $150 billion, and I'll go away, and my stock will go up, and we'll make money.
That's what he does, though. Scam. He does it really well, though.
Yeah, and
you think about it.
He's been hot lately. It's funny, Herbalife. He appears to have been on the right side. Netflix. I mean, what did he take out of Netflix? $400 or $500 million. Yeah, he's just been right. He's been the hot hand lately in the market. And
he's learned how to tweet all of his stuff as well, so that's added to the resonance of what he has to say in his quote-unquote quasi-pump and dumps, things that you and I would probably be arrested for, Andrew, if we were doing, coming out and saying, buy our stock. But c'est la vie. We're not Carl Icahn.
If you do it for billions, it's okay.
Exactly.
If you do it for $50,000, you're a criminal.
Exactly. That is where it breaks down. Mr. Alex.
But it is free speech, right? He's like, you don't have to buy the stock. I'm just going to say, I'm going to take $1 billion and buy the stock. But you don't have to buy the stock.
Exactly.
But I'm buying it.
Exactly. Now, if he put out a paid email telling everyone that he did that, he probably would be in a little bit more hot water. But he can tweet it, and apparently it's okay. So interesting where that line kind of gets blurry. But that's a discussion for another day. Mr. Alex, what are you watching for the rest of this week into the weekend?
I only had one name, and ironically was a name that was on the odd block a couple of weeks back. That is the singing clock in the background, so I apologize for that.
Telling us that we are running long on the old show.
Alcatel-Lucent. It was an odd block special, and the stock is tripled this year, so also earnings next week.
How about Alex called that on the tax thing or something, right? He's like, look for that to go higher. The Viceroy, I think, hit that one on the head. Pretty sure.
Well, even a singing clock twice a day.
Lucent still goes down as one of the worst stock picks I ever received. When it broke 63 to the downside, I couldn't keep track of how many people on the trading floor on the CBOE were saying that was the level. Every one of them other had to buy Lucent at 63. Thank God I didn't buy that one. But I don't know. I know a lot of people who did, and clearly look at where it's been over the past decade. You can see how that pick worked out. But for whatever reason, 63 was the magic number. Didn't hold for that long, unfortunately. But c'est la vie. In terms of volume,
63 cents did.
Exactly. Maybe they just had the decimal point off. I didn't realize that. But either way, that was the magic number. It just goes to show you what some of the stock picks you hear on the floor are actually worth. But that's another discussion for another day. And we are unfortunately out of time for this episode. We've been gassing on for a while, but it was a great show. Only the three of us, and we managed to fill an hour quite easily. Before we go, really quick, let me check in with my cohorts, my partners in crime. Starting with you, Mr. Alex. What is cooking in the land of OX education?
Okay, so next week, webinars. Monday, Vega. Tuesday, mini options and the commodity channel index. Wednesday, Russell Rhodes from the CBOE is coming over to talk about how to trade events using weeklies. And obviously there's a product that's just been a home run. The $150 Amazon gift card continues. The promotion at OX. Fund account within $1,000 or more. Traded 10 times in the first 90 days and a $150 gift card. And that's what's on the horizon.
Does that deal also apply to radio hosts who may or may not already have an account?
I'll see if I can pilfer one out for the November event.
The holidays are coming up. All the Amazon gift cards I could use.
See what I can do.
I do 98% of my shopping, an embarrassing amount of my shopping on Amazon. So the more the merrier from that perspective. Mr. Andrew, what is cooking in the land of the pit, sir?
Well, we actually, a couple things. We got a new assistant. So Mark and I hopefully will be more attentive, but having the assistant helps. That her name is Joanne. She's a lovely person. So when you call the option pit, trying to buy all our goodies, Joanne will answer the phone and talk to you in a nice way, unlike Mark or I, who are usually gruff and, don't want to say much. But we have a webinar coming up on November 13th on butterflies. Mark will be doing that. Our webinar series is going to restart again now that we actually have some time. We have an assistant, so we don't have to do all that stuff anymore. So the option pit is getting bigger. Another person came into the pit, as it were.
And Andrew, of course, we do have an upcoming event. The Options Insider Educational Series is jump-starting yet again. People have been asking us, when are we going to do more events? When are we going to do more events? Well, we're doing one. And people also asked, hey, we loved the last one, but we couldn't make it to Chicago. Are you going to do anything that's online? Well, we heard your prayers, your questions, your comments. We're doing this next one here in December. And it's going to be with you guys, actually. Surprise, surprise. The Option Pit folks. We're going to dive deep into the world of options on December 7th. So set your calendar for that, listeners. It's going to be online. It's going to be a webinar, so you can do it at home in your jammies, in your bunny slippers, as the Viceroy likes to say. We're going to nail down all the topics. It's going to be a 4-hour extravaganza. We haven't nailed down exactly all the things we're going to talk about yet, but don't worry, it's going to be pretty exciting. And as soon as we know what we're talking about, we'll let you know exactly what we're talking about on that show. But don't worry, it's going to be exciting. So pencil it in, December 7th, about 4 hours there, and I think you're going to like it. So stay tuned for that. From the Options Insider Educational Series and our friends over there at OptionPit.com. Should be exciting. And on behalf of Alex and Mr. Andrew and Mr. Tussaud couldn't join us today, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing, even from as far away as Portland. I believe we have some listener questions that came in from Greece, so people are all over the place listening to this show. We love it. Keep it up. Keep those questions rolling in, and we'll see you next time right here on The Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.